Ali, thank you very much for joining us today. This is our third year of undertaking this report. 2 years ago, we were very much looking at navigating a cycle, or what has become now a super cycle. And last year, it was really about headwinds, the macro challenges that are there in the market. Maybe continuing with that theme, how do you think the overall sector sits as we are here in late 2019? And what do you think the broad outlook is for 2020?
Well, as you said, it's a super cycle. And thank you very much for having me, first of all, and thank you, Joe, for proposing that. We are at the top of the cycle, that's our feeling, but we were saying it for 6 months now. It's very hard for any asset manager or an asset manager or for a lessor to acquire an aircraft today because of being at the top of the markets. On the midlife market, we are competing against the ABS markets, as we know, but we're also competing against the JOL market, the Japanese operating lease. On the new market, it's mainly JOLCO that is being very, very competitive, as we saw it in the last few months. And we saw so many ABSs coming in the market in the last quarter. So we are at the top of the market. Will it last? We see that the equity is getting thinner and thinner on the ABS. Will it last longer? We personally don't believe so. We believe that there will be a change very soon in the markets because of the oversupply of money. But at one moment, it has to calm down. How it will calm down? Maybe it will be macro change. Maybe it will be a small change because we see more and more airlines going bankrupt. But the market, is my feeling, is going to change in the next 6 months to 12 months.
And maybe picking up one of the themes you talked about there is that wall of liquidity that's out there, that the amount of cash that's moving towards aircraft leasing, and you mentioned the ABS market. Is that a market you've looked at, or as you mentioned, it's been incredibly strong, particularly in the second half of this year. How do you see that market going forward?
Of the ABS market?
Yeah.
Well, we saw that the equity notes are being traded now, but I just was with some of the investment bankers this morning discussing it. It's becoming thinner and thinner. It's harder to trade. I think there's an oversupply of ABS in the market. And the feedback that we get is that there are lots of them being done in a very, very short period of time. So my feelings will slow down, but they will still exist because there's securitization of an asset. What we will see, like we saw in Japan, the first ABS happening in the Japanese markets, maybe we'll see ABS is happening in other jurisdictions, not only in the US capital markets. The Japan one was an example with a much, much thinner equity yield. So it will still be active, but less than what it used to be in the last few years.
And that discussion in the market, or what we've seen, maybe if you look at when the ABSs came back, maybe 4 or 5 years ago, some of those early deals, there was a bit of walkaway syndrome, I would say, where the servicer was putting together a portfolio, but maybe not staying as invested in it. Is that something you still think is there in the market, or do you think investors have become a little bit wiser in choosing who they partner with into these ABS structures?
The investors have become wiser, yes, that's true. They check what they're doing, yes, that's true. But we still see investors that are going for ABSs. I'm speaking about the E-notes, of course.
Yeah.
That are going for ABSs. That's for us, if it was just an equity deal, does make sense.
Yeah.
Like when you see the deals that are being done and the portfolios that are being done on the equity side, I'm not speaking about the A, B, and C tranche.
Yeah.
I'm speaking about the equity tranche. Is for us as an asset manager scale. Like if it was some of the portfolios we saw coming in the market, if we were the asset manager and we had to put our own money, I'm not speaking about fees, fake money, I'm speaking about our own money on it on a first loss basis, I would be scared of managing those portfolios.
And that piece on that tradable E-note you talked about, you would have obviously seen that come through originally in kind of the GCAS and then the ALC ABSs. Do you think that will be the go-forward structure, and do you think it's had a genuine positive impression on the ABS market?
I don't know about the two transactions you spoke about very well to speak about, but in general in the markets, I don't think that the E-notes are liquid enough or tradable enough in the markets. Like they are starting to, but the tradability of it still have to be proven. Like you don't see a lot of like E-notes being traded very quickly as an investment as of today.
And keeping on the funding theme, you have seen a trend line of more and more lessors moving to investment grade status, and you can see that reflected in the quantum of funding that's out there, back to that capital point you made. Do you think that trend line will continue, and how have you seen the markets kind of become more educated on the sector in recent times?
Well, I don't know about the first part because we are not investment grade. I don't know how they're doing it. I don't want to get involved in that. But the second part, what we see about the lessors, 4 or 5 years ago, there were very few asset managers. BBAM was, for example, one of them, and few others were asset managers in the market. Today, we see more and more of the lessors becoming asset managers. And that tells me something, because we're a fully independent asset manager. That's what we did since the beginning. That's what we like doing, is being an asset manager. What we see is more and more lessors becoming asset managers. And by the lessors being asset managers, instead of deploying the equity that is behind them, because usually they have one equity and that equity owns the lessor and they go and invest for that equity. But now we see more and more of them looking for other pockets of capital that they will manage assets for. That tells you that they're not willing to invest their own equity, but they're willing to manage assets. And that scares me about this change of the markets because of the conflicts of interest. Of course, this is obvious. But the second part is that when you see lessors with their own equity moving out of investing their own equity to go to invest for other assets, that should tell us something about the market.
And that piece, if you're an investor looking at it, and you'd spend a lot of time talking to investors who either some familiarity with the sector or coming to the sector new, what are the things you're talking about those investors when you're trying to educate them and explain them really the ABL way of coming at a transaction?
Well, the first thing is the conflicts of interest. We have the same contacts with every investor we have. It's the same upfront fee, asset management fee, and the marketing fee. All of them have the same one. So if you have 2 aircraft with investors that are going with different airlines that are going bankrupt, we have exactly the same marketing on the back end, so we have the same incentive for both of them. The second part is to educate them as much as we can, and in some cases is to put our money with them as first loss. So we lose our money before they lose their money. And that was helpful for us. Like, even if it's smaller amounts, even if it's not as big equity amounts as they will, that did change for us the markets very quickly. The second part was to show them our technical capacities, and to, as you saw, we did an exclusive JV with SBI in Japan. It was for them to come and check every office, every technical capabilities a few times before approving the deal. So that's helped us a lot. And we spend a lot of time on the road educating the investors, and the first thing we say, look, we're going to put real money with you. We lose our money before you lose your money, but don't expect very double-digit high returns, because we cannot achieve that. So we are very honest about what we can achieve. We say we put our money first, we lose our money before you lose your money, and if the deal is conservative and makes sense, we'll do it, but we're not going to go for an insane return that we don't think we can achieve.
And have you seen a trend line that when investors come at this sector, they tend to stick around? Is that a fair summation of what you've broadly seen?
Usually, yes. If they come into, usually they will invest in ABS, then they will invest in an asset, and then they will stay in the sector. Especially in the Japanese market that we are very active in these days. We see more and more activity there because of the JOL and the JOLCO markets, but also because of the yield. Like, we have the tax leases, but we also have the yield that is happening more and more in the Japan markets. And those investors are looking for yield more than tax incentives as of today. And we see more and more people coming from Asia, Asian, Korea, Japan into our industry and sticking to it. But they want to do it either to partner with an asset manager, to invest in a lessor, or to buy a lessor. That's how they enter the market.
And to pick up maybe specifically on that JOL and JOLCO market, which you would have a very close affinity to, how have you seen that market grow and develop over the last 12 months? And what concerns might you have in relation to the JOL and JOLCO market?
Well, the JOL market is becoming bigger and bigger than it was before. So we see the JOLCO market almost stagnating, and the JOL market is becoming larger and larger. On the JOL and JOLCO market, what worries me is, like we saw it last year, there was a change in law about the treaty lenders, and you have to book some part or even big parts of your debt in Japan. And there's not enough capacity in the debt market in Japan to do it. And that's my biggest worry. My biggest worry is a change in the regulation. Whenever there's a change in the regulation in the Japanese market, that's have a direct effect on the JOL and JOLCO markets, of course. So that's the tax regulation is the biggest worry. We saw it with the German KG when the regulation changed and it started to die down. We saw it with the Norwegian KS. So a change in the regulation is going to die out a product that is very, very good product that's allowed a lot of airlines to be financed for very cheap.
And going with that, you have what is becoming a more crowded space, like more parties that are trying to get into that market. Given the capital that is there, and I would say from a jurisdictional perspective, a lot of sophistication in understanding the leasing market. Would you have a concern that there's possibly too many players going after that space, and what that might do to the quality of transactions that are being done?
About the JOLCO and the JOL market? I don't believe so, because in Japan you have maybe 5 to 10 houses. Okay, so those houses are very known, and very few of them are not already in aviation or in partnership with someone. We have SMBC, we have BBAM, etc. So you don't have that many houses that can underwrite the equity and that have the distribution channel. Because I didn't speak about the equity in Japan. It's all about, do you have the distribution channel or not? If you look, for example, our partnership with SBI, they have 23 branches all over Japan that can distribute the product directly. If you are going to not distribute the product directly, you're not going to be competitive. So your partner needs to have branches all over Japan to distribute the product to the investors. So you don't have that many banks in Japan that can do that, or financial institutions that can do that. So the market is limited, like in capacity of who can do it, of which equity houses can do it. So you don't have that many equity houses. So I'm not worried about that, about the markets being overcrowded. You have few players and lots of deals.
Yeah. And maybe just linking that in before we move away from Japan, you mentioned the ABS transaction, what kind of stratas that have been done there, which I think is a very interesting transaction and a positive development. Is that kind of reflective as well, aside from just JOL and JOLCO market, of the appetite maybe even from the regional banks in Japan to get more involved in the space?
The regional banks are becoming more and more active in Japan, but you have to have products that is appealing to them. Like we did our first AFIC JOLCO with Elal. That's the first time AFIC and JOLCO were combined. So we structured that deal to be an AFIC JOLCO, and the debt.
Just talk me through more of that deal. I should be curious to see.
So the deal was a Japanese deal. That's why it was very attractive to the market in Japan. The debt was a Japanese bank. The insurance fund was Sompo of Japan, so Japanese insurance. The equity was Japanese, of course. And the fact that it was all Japanese, the bank was able to sell more than 50% to the Japanese regional branch within a few months. So that's had a lot of appeal in the Japanese market, and the Japanese branches asked us for more of that. That was the first deal. Doing more, and we're developing new products right now that are similar to that one, but with other coverage, other insurance companies that are going to, insurance products, sorry, that are going to have the debt insured, that are going to give us a higher loan to value and therefore a higher first year loss. And that will allow us to have a more competitive product in the Japanese market. Because what's happened in the last few years is that you had exactly the same JOLCO again and again being sold in the market. Having something innovative about the JOLCO structures is more appealing to the regional banks. They don't want to just invest in debt. They want something that have something else in it, an insurance into the debt, something that will give them more innovative and more appeal to invest in it.
Yeah, I think the innovation point is a very interesting one. I think you look at this sector and it's becoming more and more crowded, but what's always shown is an ability to innovate from a funding perspective, and then that's whether it's tradable E or moving into AFIC. The corollary to that is people are chasing aircraft. So you have a lot of money coming in, whether it's funds or ABSs, and actually getting the assets is the tricky piece. How are you finding that market, and where you probably don't have onesies or twosies anymore to try and pick them up? How competitive do you think it is in the secondary market to actually acquire aircraft at the moment?
It's very competitive. It's very competitive because everybody wants to sell as a portfolio of good and bad, and that's when there's no more discipline in the market. Look, we never lie to our investors. That's why we moved from midlife, that we did a lot in the past, to doing JOL and JOLCO for the moment, and to going back maybe to midlife once the markets calm down. But we never told our investors that we can do double digit. We said this is what we can do, and the Japanese markets understand that's the equity yield that we can do, and they're happy with that equity yield. So in today's market, if you are looking for double-digit IRR, I believe it's very hard to achieve, and most sellers want to sell your portfolio. And when you go to do maybe 2, 3, 4 aircraft, most sellers will not waste the time to do it because they can just sell a whole portfolio to someone that's going to go to the ABS market. So there's no more, that discipline is a little bit gone. And when you look at some of the pricing of the portfolios, honestly, we don't understand how it can make any return, so we just stay away from it for the moment and we watch until the market comes down.
And that, what will be, do you think, the drivers behind that? We've moved into a slightly more benign environment from an oil price and an interest rate perspective, but who knows how long both of those things will last. Is it an interest rate spike that's going to bring a day of reckoning to people who aren't keeping their discipline? And I agree with you, I think discipline is the key point. Or what other factors do you think are going to turn the market on that side?
Well, when you look at all equity investors that invest in our sector, there are people that invest in infrastructure assets. So they're going to invest in other asset classes, but there's nothing that brings the yield today. Like if they had other options, they would go for the other options. It's not because we are amazing people. It's just because we are selling assets or we are leasing assets that are giving them some kind of yields. If they can get that in real estate, in shipping, in other sectors, they're going to go and invest in those other sectors. It's because they believe that there is some value in aviation today. That's why they invest in it. If there's a change, as you said, in anti-state, if there's some other asset classes that are going to bring them more money, they will just disappear from our sector and go into that other sector.
And do you think that squeeze that's there at the moment, people possibly not being as disciplined? We've talked, I would say, for a number of years of lease rate factors going to 0.7, going to 0.6, and there's talk of 0.5. Where do you see those lease rate factors going in the near term?
Well, they're starting to be below 0.5. If you look at some of the deals that are being done today, they are below 0.5.
Which presumably is just uneconomic.
Yeah. Like if you look at the deal and you look at the debt and the equity, you have about 0.4 to 0.45 that's just going to service the debt. So then how do you get the residual value? How do you get the asset management? How do you get the origination? So there's no more fat in the deal at the end. So the only way you can do that is by pumping up the residual value. There's no other way. Like our industry is not that complicated. Like you have a purchase price, a future value, and then you have your yield. So and your loan to value. So if you are going to say that this deal is making X, two ways: lower purchase price or higher is your value. Well, okay, your cost of debt can be lower than everybody else. That's something that can be argued, but your residual value is what you are going to play with. So how you book your residual value, how you decide what is the value of the engines at the end, what is the value of your landing gear, your APU, etc., is what is going to make you yield.
And those residuals presumably are still linking to the point of those bits we just talked about: oil relatively stable, holding residuals better, lower interest rate costs, and a very hot market with a lot of capital coming in. Have you seen that on the assets you guys have managed or owned, that residuals have stayed extremely strong, or what's your view on the residual values at the moment?
Well, the residual value stays strong until you come to market to sell that asset. So, as long as it's on your book, you have that residual value in your book. You can say whatever it's valued, but until you sell it, that residual value is what the market is willing to offer you. Let's say, for example, if you look at the 737-800 today, like just before the MAX issue, the residual value of the 737-800 was very low. Then you had the MAX issue, and everybody wanted 737-800. But if we remember, just before the MAX issue, there were so many 800s in the market that nobody wanted. And today, we have this new norm that the 737-800 value is X, which is just due to that MAX issue for the moment. The moment the MAX issue is solved, this will go down to where it's supposed to be.
Back to MAX in 1 second. I suppose the ABS is the other market where you have a lot of visibility and transparency of the assets going in. And it would seem, whether it's ABS or other markets, they are pushing those residuals, the fact that capital is there. On the MAX point, to pick up on those pieces, how do you feel that has impacted on the leasing community in the immediate term, and where do you see it going over the next 12 months, just from a leasing community?
The MAX issue?
Yes.
So the MAX issue took away 30% of the deals in the market. So from one day to the next day, 30% of the transactions that were able to be done because of the MAX went away. So people started, especially on the debt side and the lessor side, started competing for the same deals, because we all have to do deals. So then that's when the lease rental factor of the whole market started to go lower and lower, because 30% of the market, or whatever it is, because of the MAX, disappeared overnight. 737-800 lease rental factor went higher, which I think is a mismatch compared to where it's supposed to be, because people that don't have the MAX have to fly the 800 most of the time. That will I believe in the MAX. I believe in Boeing. I believe in the MAX. They're going to fix it. It's going to be fixed. And the market is going to come back to normal, because the 800 is going to go back to where it's supposed to be. And the lease rental factor is going to go down. In between, while the MAX issue is happening, people are saying that the 800 is at X, whatever is the lease rental factor, depending on the vintage, which shouldn't be there. And they make the assumptions based on the whole lease, based on today's lease market, which is inflated lease due to the MAX issue. Q1, maybe Q2 at the worst case, the MAX is going to come back. It's boring. They're going to support the product. They're not going to make that product disappear. So there will be a solution. It's just a temporary issue. But I fully believe in Boeing and I fully believe in the MAX.
So in the shorter term, you've had this bounce possibly for lessors in that push in demand. Is there a danger if you do get into Q2 next year and the MAX is fully back that you have an oversupply of aircraft in the market?
Oversupply of deals, yes. Oversupply of aircraft, I'm sure Boeing and Airbus are going to manage that properly to make sure that there's not an oversupply. But there will be again enough deals for everybody to do. So therefore, the banks are going to become more picky. The debts are going to be more picky. And if the debts, which is the big part of each transaction, is becoming more picky, therefore you are going to have lease rental factors that are going higher.
Not an area you guys play in yet, but if you look at the interaction between the OEMs and lessors, so it's expected now that the take up on new aircraft from a lessor basis, maybe factoring in the sale and leaseback market, is going to be breaching 40%. Within the leasing community, do you think the OEMs give enough respect to the lessors versus the airline customers that they have?
We don't have an order, so I pass.
Not a problem.
I'm not going to do this one.
On the airline side, turning to that piece, you mentioned at the start we talked a little bit around airline bankruptcies, and there has been a bit of a spike in that market at the moment. How's your feel over how the leasing community has managed those bankruptcies over the last 12 months?
I think most of the aircraft goes to market very well, but that's bigger fear for especially small players like us. It's when the price of oil is low, the NCSAs are low, the leasing community is willing to give very, very low lease rental factors to the airlines, and we still have bankruptcies. And that's something that scares me a lot more than the MAX issues and the NCSAs. It's the fact that airlines are going bankrupt when the markets cannot be better.
Yeah.
Like, it's an amazing market. NCSA low, fuel low, lease rental factors very low. So if you're an airline today, you should be making the most profit you can be in your lifetime. And the airlines are going bankrupt, and that's what scares me. This part worries me more than NCSAs and the cost of fuel. And
you've had, if you look at what is driving the profitability of airlines globally, and you're into the kind of high 20s IATA expectation for 19, it's US driven. It's very, very predominantly US driven, and you could argue that's because they've been through a wave of consolidation. They've cleaned house. They know what they're doing. Do you think there should, and it might happen, that there will be more consolidation outside of the US from an airline perspective?
Yeah, of course. It should be a consolidation all over the world to be competitive. Like, to be competitive, most of the airlines are going to consolidate because you have a lot of the airlines that cannot be profitable anymore and they cannot compete anymore. So most of them are going to consolidate, and you have to be competitive. We saw it in Europe with AIG that was able to compete.
Do you think it'll happen?
Yeah, I think it will happen. Yeah, markets dictate.
Yeah.
If you have a choice between going bankrupt or consolidating, of course you're going to consolidate.
And on that consolidation theme, if you look at the leasing environment, there probably hasn't been extremely large-scale M&A for a couple of years, right? Do you think we are going to see another bout of M&A in the leasing community? We've had a couple of things happen, whether it's the ACG transaction, a lot of talk around Aircastle at the moment. How do you see M&A/consolidation going in the leasing community over the next year or so?
Well, we saw DAE acquiring Airwas. We saw Goshawk acquiring Sky. You see a lot more of that, but the deal have to make sense. Like, if you're going to consolidate two platforms into one, and I'm speaking as a small platform, I see just between us and our partners, for example, the difference of cultures between platforms is very hard. So if you're going to consolidate two platforms, you have to make sure it's the right one that will fit, because every company have a culture. I see it with my small team. It's a culture of a company, and if you want to make it fit with another culture, it's very hard. Like, we're very entrepreneurial, everybody makes decisions, the process is very fluid. If you go into a company that have a very, very rigid process and very hard to do, between two platforms, it will be very hard to integrate.
And that piece which probably feeds into it is talent, right? So you do come back to platforms and the people within them. You guys have offices all over the world, right? A small team, but diversely split. How do you think the sector does in attracting talent, and as a smallish player in the market, how hard do you find it to attract and then retain the talent?
We are very picky. We are 28 people worldwide today. On the 28 people, we make sure that we have different nationalities, that we have equality between men and women. If you see on our website, that's very important for us. We work very hard to have different nationalities, to have equality men and women, and we work very hard on that. And how, to answer your second question, how to attain talent. Attack talent is not as hard as it used to be. We are able, because we are becoming bigger, to attack more talent.
Just as a sector, you mean generally more visibility?
More visibility, yes. People will want to be part of somewhere where people are doing innovation. To attain talent, your team have to work hard, of course, but they have to have fun doing it. Like, I'm very thankful for our team. Like, without our team, we will not be where we are. Like, they're doing most of the work. They work very hard. They come very early in the office. They leave very late. And I'm never there. Like, I cannot be in the 5 locations all the time. Like, and the managers are not there. So you responsibilize the team. Even if they're young or old, each one has to be responsible for what they're doing. And I think that's what's missing for some of the companies, to give responsibility to someone and to let them make decisions. Like, everybody in our team can be in a meeting and make a decision on the debt side, on the transaction side, and they will make the decision themselves, and they stand behind this decision. So if you responsibilize people, I think they love it. If they're part of a team where their voice is heard, where they're part of something where they can say yes, no, and stand by it, I think they will stay. And that's what we work very hard on, is to make sure that everybody make decisions, because I cannot be awake 24/7. I cannot be between the Hong Kong office and Dublin office awake to make decision between the two. They have to make their own decision if there is a decision to be made. And giving them that chance and that power, even if they're young, that motivates them to stay.
And the locations you're in are interesting, right? So obviously one
New
of your
York,
bases,
which is the first one.
Yeah, and say we're sitting here in Hong Kong now. The regime here from the lessor ownership perspective is probably 2 years old and hasn't quite taken off yet, and these things take time. What's your view of how the actual regime as an asset owner here will progress or won't progress over the next couple of years?
It will. Look, we always say this, we are like 2 headquarter company. We have the New York office, the Dublin office, Casablanca that covers Africa, Dubai and Hong Kong. Having a headquarter in Hong Kong and a headquarter in Dublin helps us a lot. Dublin, of course, for the trading, for the relationships, is very useful for us, and of course for the double taxation treaties. The Hong Kong headquarters allows us into China, of course, and being from here allows us to cover Asia from the Hong Kong. The Hong Kong Invest people are very helpful. They are helping us a lot as an asset manager. There's that new regulation that was set up if you are more than 2 years into the Hong Kong jurisdiction. And Hong Kong is, you need to be here to cover Asia. It's very important to be in Hong Kong to cover Asia. It's very important, it's very easy to be in Hong Kong to cover China, back and forth. I really believe that the market is moving to Asia. We like it or we don't like it, but if you look at most of the leasing companies, the shareholders are from here. We can list at least 10 of them that the shareholders are from Asia. So that's where the market is going to be in the future, and I really believe in it.
And do you think then that the Hong Kong piece grows and complements an Irish platform offering, and you will just use both on a strategic as needs basis, or how would you see it work?
Yeah, you have to. It's complementary. The Hong Kong and the Dublin are complementary to each other. You have to use the Dublin when it's the best advantage, and the Hong Kong one, and both of them have to be companies that are sustainable and that are, of course, a company of substance, but they have to complete each other.
And moving tax slightly, an issue I would say that's moved up the agenda a massive amount in the last year is around climate change and sustainability. I think if we were having this conversation 12 months ago, it registered slightly but not significantly, whereas in the conference circuit now it's probably the second or third thing people are talking about it as air travel moves more in the crosshairs. How do you think the sector, both in aviation finance and the airlines themselves, are doing things to combat climate change and the CO2 emissions that they're driving, but 2, putting across the efforts that they've made to date?
I think there's not enough effort made by the leasing community. Let me tell you about our company, and after I can speak about the market in general. We were in off-site in Morocco in June with our team, and we were brainstorming, and lots of the young people in our team said we need to do something for the environment, which maybe because I'm old I didn't think about it, but a lot of the young guys said we should do something. I said, okay, let's come out with the projects. And while we were in Morocco, they came out with this amazing project called the CEDAR project. I think it was launched 2 weeks ago. It's I think it's been published this week on our website. And the cedar project is every time we do a transaction, we plant a certain amount of cedar trees. I believe they decided 100 trees for every transaction. And I know it's not enough, but at least it's something. And it was lots of young guys in our team that said, this is what we should do. We're in Morocco. Let's do something for the environment and in Morocco. I said, okay, come out with something. And the team in Casablanca goes, how about we do plantation of forests in the cedar mountains? Since the cedar is going away, we plant it every year. That was the idea. I think it's an amazing idea that they came out with. It's the team that came out with it, and I'm very happy that they came out with the cedar project. So each time we do a transaction, they plant, during our offsite, 100 trees. And maybe if we can give back to society on doing that, it will help a lot, and of course speak about it. Not doing separate things. Maybe it should be a group thing that is done by the whole industry. I think it will change lots of people's vision.
And maybe changing tack then on the technology side. One of the challenges lessors have found with increasing difficulty over the last couple of years is the administration and time burden associated with innovations, and the onerous contract negotiations and the involvement of airlines. And one of the goals around this is the GATT system, so the Global Aircraft Trading System. Have you any thoughts over whether you think that is, one, a good thing, and two, do you think it'll actually take off?
It is a good thing because it's going to simplify documentation and a big part of that, yes. However, the fact that they want it have its limit. You still have in our industry, you still need the human touch. It's going to be very helpful for lots of the parts, but when you are doing innovation, etc., you still have to negotiate a lot of the points of the innovation. We're not going to start trading aircrafts anytime soon on our iPhones. I don't think it will happen anytime. Well, maybe it will happen, but then we're all out of a job. But I don't think it will happen anytime soon, because when we trade aircraft, as you know, there's lots of very customized parts of the transaction that we do, and we customize our transaction a lot to make sure that it fits with either the equity investor, with the way we manage assets, with the airline. So each transaction is kind of unique. They are not a copy-paste, because if it's a copy-paste, anyone can do it, and we don't need all these people in this industry. So each transaction is unique. Each equity investor needs something that you don't need for another transaction. But having the GATS, being able to gather all the documents in one place, could be an interesting way to changing that.
And generally on technology, how do you feel the sector is with respect to advances in technology? Some would look at the aviation and say it's a little behind, right? Is it actually cutting edge in its use of technology, whether that's customer facing or whether that's internal and how you house it? What's your views in that respect?
Well, I speak from our side, and also from I don't know the other people platforms. It was from our side, we invested a lot in machine learning tools, in artificial intelligence for some of the parts to learn about what is the cost, where the market is going. Machine learning tools was a big investment for us at the beginning. We bought a software from a French company that allowed us to use a lot of artificial intelligence, and that software allows us to see where the market is going on our fly forwards, on the future value of the assets, and that's allowed us to be a little bit cutting edge. That's something that the Japanese loved when they doing the partnership. They were looking at different asset managers, and that's the part that they got really happy about, is that our use of technology. That's something that they didn't see anywhere else from what they tell us. I don't know the other people platforms, but they were very happy about our use of technology and how we're able to process aircrafts and how we're analyzing using technology. Because as you know, the group that we have a partnership with in Japan is a technology group, so for them it was very important to have that. I think we're behind compared to the other industries. When I was in other industries like real estate, etc., it's much more advanced than our industry. But our industry, as I said before, needs to have that human touch. So each deal is unique, and it's more about the experience, about where we think the market is going, that we need to add into each transaction, and that will be important. Because we can add, I think we can do a lot more in technology to be different.
I think that's fair. I think it's very fair. In closing, Ali, right? We talked at the start and where the market's going and outlook being somewhat skeptical, but there is a lot of money out there. If you had a magic wand and you could change one thing, be it within ABL or the sector more broadly, what would you change?
In general, having more discipline about the transactions. And yes, I know that there's a lot of equity in the market, but educating each investor about the investments they are doing will help a lot. I am really worried about if some investors get burned in this market, they will go away and it will affect all of us. Like when we see some of the deals, it scares me about what they offer to the equity investors. And if the markets have a bad reputation, it will not affect one company, it will affect all of us. Because nobody will trust, I think we saw it in the past in shipping, for example. Nobody will trust our industry anymore and will not trust us anymore. And it's all about trust. Our industry is all about trust. When the equity investors give us money, it's because they trust us. If one of us, as an industry, break that trust, I think it will affect all of us.
Yeah. I think that's very fair. Well, I thank you for your time today, and I wish
you
you
so much.
success.
Thank you so much, Joe. Thank you for having me.
Thanks.